Good afternoon. You're watching Business World Live here on One News. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Thursday. Okay, some last minute buying once again saved shares today after the index tumbled following that record unemployment rate in September. Again, you have the main index climbing 0.3% to 7,203. That's despite joblessness surging to 8.9%, the highest yet in 2021. That translates to 4.25 million unemployed from the 3.88 million logged back in August. Now, a number of factors there. Of course, you have the height of restrictions happening in September. At the same time, you have bad weather causing some 860,000 farmers to actually lose their jobs. But NEDA still is hoping that labor numbers will be improving come October, especially with smaller lockdowns already in place, especially here in Metro Manila. Now, speaking of easing restrictions, curfew hours finally lifted in NCR beginning today, allowing establishments to operate more hours ahead of the holiday season. That's sending cheers here to a number of mall operators in today's session. Here you'd see Ayala Land and Robinson's Land both in the green. This is Ayala Land also reported a 38% increase in third quarter net income. Jollibee also on the upside here, as you can see right here. This as the operator accelerates its overseas expansion by buying 51% of a bubble tea company Milk Shop International, which operates the Milk Shop brand. Now, JFC again higher by 2.6% to 238 apiece. Now, off to some earnings report. We kick things off with PLDT, with net income dipping by 4% apiece for the 9-month period to 18.8 billion pesos. That slide is due to our revaluation losses following the peso's depreciation. Consolidated revenue likewise is higher, as you can see right here, up by 7% to 9.2 billion pesos. So that's due to record high service revenue from the July to September period. Also, telco core income is higher by 10% to 23.1 billion pesos, bolstered by lower tax rates. 9-month EBITDA likewise up 8% to a record high of 71.1 billion pesos. 9-month mobile data revenue also increased by 9% to 52.6 billion pesos. PLDT says they are on track still to meet the 30 billion peso guidance for the year. According to Chairman Manny Pangilinan, companies are now measured on two additional metrics which define their market value: that sustainability and digitalization. And according to him, these are no longer options but imperatives. Hence, the move to also launch Maya Bank, their digital bank, by next quarter. That, of course, will leverage on Pay Maya as it focuses on the underserved and the unbanked. However, despite those earnings figures, it's here PLDT on the downside, down 0.6% to 1,624. Now, from earnings, let's have a quick check at yesterday's big mover. That's all day. The trading newcomer rose 50% on its debut yesterday, but still unable to duplicate Marimart's feat back when it went public with a 3-day gain. All day earlier at least swung between gains and losses before finally sliding all the way through, down 17 and 0.8%. Claire Alviar of Stock says investors are taking their profits. Although there are more buyers today than yesterday, this volatility could take out the weaker hands as well, according to Alviar. All day down to 74 centavos a piece today. Now, off to a potential listing at the local bourse. The Figaro Coffee Group has filed an application to raise 1.77 billion pesos from an initial public offering. A prospectus submitted to the SEC showed that Figaro plans to offer 1.26 billion common shares priced at 1 peso and 28 centavos a piece, plus an overallotment option of up to 126 million shares. The IPO proceeds will be used to bankroll store openings and renovations, debt repayment, IT infrastructure, and potential acquisitions. The Figaro Group operates 90 restaurants and branches nationwide, including 52 Figaro coffee shops. It also operates Angel's Pizza outlets, Tianma's Taiwanese restaurants, a TFG Express outlet, and one Cafe Portofino outlet. Here are other stories from the corporate front. Robinsons Retail sustains its momentum in the third quarter as it reports a 38.7% jump in its net income to 1 billion pesos. 9-month profit, meanwhile, climbed 13.3% year on year to 2.7 billion pesos. The company attributes this growth to the double digit same store sales growth of the drugstore segment, as well as the positive same store sales growth of the department store, convenience store, and appliance business. Robinson's retail's figures, however, was still dampened by effects of the pandemic, as year-to-date sales reflected a decline of 0.6% to 108 billion pesos, as well as 10.4% dip in operating income. The company remains hopeful that it can sustain its growth momentum in the succeeding quarters as mobility restrictions continue to ease. Now, another earnings report, Nickel Asia jumps 168% in the first 9 months with an attributable net income of 6.17 billion pesos. Total revenues have also increased by 39% year on year to 21 billion pesos in the same period. The firm says the higher net income was primarily driven by higher ore sales prices from January to September. The company sold a total of 14.4 million wet metric tons of nickel ore at the weighted average realized price of $27.96 per wet metric tons in the first 9 months of 2021. President and CEO Martin Antonio Zamora says that while the Chinese economy is currently facing short term uncertainties, the surging electric vehicle industry remains the main driver of nickel demand over the long term. And it looks like 8990 Holdings is on its way to recovery as it reports double digit growth in its real estate sales this third quarter. Real estate sales for Q3 increased by 11% year on year to 5.3 billion pesos this year. Meanwhile, net income grew by 6.6% to 1.9 billion pesos. In the 9-month period, 8990's real estate sales surged more than 57% to 15 billion pesos. 8990 Holdings President and CEO Anthony Vincent Soto says these results show the increasing confidence from the firm's core market of first-time home buyers and end users as the country ramps up its vaccination efforts. Soto expressed confidence that 8990 will finish 2021 strongly as it eyes to eclipse its pre-pandemic performance levels within the last quarter. Okay, lots of recovery prospects and those earnings reports. Speaking of recovery, can we say the same at least for the hospitality industry? Now, to find out how they are coping and if they're finally seeing the light at the end of the tunnel, we have Michelle Ong, a hotel owner and a Red Doors partner. Good afternoon, Michelle.
Good afternoon, Jester. Thank you for having
Right.
me.
Okay, so let's kick things off. We're now seeing a lot of easing, especially here in Metro Manila. How is that at least reflected when it comes to your performance over the hospitality sector?
Well, initially we were having a hard time last year because of the different guidelines of the government. But surprisingly, we actually did very well last year. We were having a 70 to 80% occupancy rate. However, we had the ECQ again around June of this year, and of course, our occupancy rate went down. But it's still okay, 50 to 55%, and going up. So we're quite hopeful, and yeah, hopefully, it's now stable.
Mhm. But have the numbers improved at least when NCR went to, or at least when the alert level system was implemented here in NCR and even in other provinces?
Well, in our case, when the alert level went down, yes, the occupancy rate has gone up a bit. We see it going up since December's coming up, and quite a number of Filipinos are allowed to travel locally again. So yes, we're hopeful that it's going up. I mean, we see it also in our hotel.
Mhm. Now, I know earlier you mentioned that even at least at the onset of the pandemic, occupancy level was still quite high. But still, I have to ask this: did you at least over at Red Doors experience any closures in your partner hotels?
Yes. Last year we had to close for 2 months, and that it was really a struggle, of course, as a business owner, because we needed to, of course, pay our employees as well, and then we didn't want to, you know, we didn't want them to lose their job, so we kept afloat. When we opened up, our advantage as a hotel really is that we're near two hospitals. So the people staying in our place were actually people who were visiting hospitals. They need a place to stay, or people who just wanted a place to work, to be, away from their family for a short time, just to have some peace and quiet.
Mhm.
Yeah.
Okay, so I guess that at least gives us an idea as well as to how you cope and adapted during the pandemic. And one major way, at least, that hospitals were utilized, or hotels rather, were utilized in this pandemic, so that a number of them were used as quarantine facilities. How did that help, at least, with your operations?
Our hotel is not a quarantine hotel. It's actually an essential and uh, leisure staycation hotel. We did not apply for being a quarantine hotel, because BOQ requires us to have a telephone or intercom in each room, and that was quite costly for us at that point in time. So we're quite happy that the Red Doors help us secure the permits necessary to be an essential and leisure hotel. So that somehow help us in getting clients also, and they were quite aggressive in marketing the properties who were not BOQs, who were not, quarantine hotels.
At least now, are you seeing a shift in attitude towards leisure travel and staycations?
Yes, for our property, we see quite a number of people coming, staying in our hotel just to work.
Mm-hmm.
I guess because, everyone's working from home, doing studying remote online, so they needed a space. So what we found is that Wi-Fi is really necessary. We needed to have a strong Wi-Fi. uh, we needed that the space has to be quiet for them, so there's a shift in terms of that. So yeah.
And talking about shift, I mean, digitalization has been the name of the game during the pandemic. How important is it, at least for the hospitality industry?
Well, of course, it's easier for people to book online now using the Red Doors app. It's very user friendly, and also for us partner hotels. In terms of, we can't visit the property as much, so I can do it online, check on what's happening. I have the reports. I have reviews from guests who are staying in the hotel, so we know what's happening. Red Doors also installed the hygiene pass for our employees to keep them safe. So we know if our employees are sick or unwell, because we take their temperature regularly, and it's posted on the app. I mean, for the
Mhm.
for the partners as well.
Okay, now lastly, Michelle, we're heading into the holiday season. Are you at least already seeing an increase in reservations and bookings?
Yes, we do. We see an increase in the bookings. Normally, our guests are coming from the provinces, or if they're, so coming from the provinces usually, and yeah, so we actually have advanced bookings. We have a lot of repeat guests as well. So, yes.
All right, thank you very much again for your time this afternoon, Michelle Ong, a hotel owner and a Red Doors partner. Thank you, Michelle.
Thank you.
And those are the biggest stories of this trading day, November 4th, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos and we are One News. Mask on, wash hands, and stay safe, Philippines.